Welcome back. The lack of people listing their houses for sale has become a bigger and bigger problem. So for example, according to a brand new report from Redfin, new listings fell by 27% from a year ago, and that's the biggest decline since the onset of COVID. In addition, we're seeing a huge decrease of contracts being signed between buyers and sellers as well. That's because pending home sales fell by 14.5% from a year ago. And that's the 13th consecutive month of double-digit decreases. On the other hand, home sold prices are only $4,000 shy of last year's all-time record highs, even though average mortgage rates have been around 7% for about 1 month. So in today's video, I'm going to share this brand new report from Redfin and also a lot of other metrics in today's video. So I hope you guys get a lot of value in today's video. And of course, if you do, please hit the like button. I greatly appreciate that. Of course, consider subscribing as well because I post frequent housing market updates so you guys can make a more informed decision about whether to buy or sell a house right now. So here's the actual report from Redfin just posted on June 29th. Again, this is absolutely crazy. The all-time record high that was set in June last year, we're only $4,000 away from breaking that record here. Absolutely crazy. I'll share the chart from this year for prices compared to last year, which is pretty astonishing, especially given the fact that rates are so much higher now compared to a year ago. Anyways, here it says the median U.S. home sold price is down just 0.9% year over year, the smallest decrease year over year in about 4 months. And that's due to a lack of houses for sale for existing houses and also the mismatch between supply and demand. It also says here home price declines are shrinking. The typical U.S. home is selling for roughly $383,000, about $4,000 less or about 1% less than the all-time record high that was set last June. That's the smallest year-over-year drop in nearly 4 months. So take a look at this. This is just absolutely crazy. Let me just zoom in a little bit here. This is absolutely crazy. Anyways, we started the year at what we were at $349,000. Now the median sold price is $383,000. The all-time record high was right there, $387,000. That was set during the 4 weeks ended June 19th. So we're only $4,000 off from breaking last year's highs. Absolutely crazy. Another thing to note here is that prices have been increasing ever since really February this year. But over the past month or so, the increase in prices is actually steeper than last year's levels. And keep in mind, back in, early April last year, average 30-year fix surpassed 5% for the first time in about 2.5 years. Average rates 2020, 2021 were around 3%. By the time we hit April 2022, rates surpassed 5%. Therefore, that's why we had prices peak in June. And then we had this huge fallout in prices because rates more than doubled from the year before that. Whereas this year, prices have been increasing more or less ever since February this year. And I mentioned this in a previous video from a week ago or so, because prices have been increasing this year at a fairly fast clip here. But last year, because we had a shock of the giant increase in rates like we're not seeing this year, I would imagine, like I mentioned in previous videos here, we're not going to see this sharp pullback in prices like we did last year. Remember, last year, demand absolutely just fell off a cliff because rates increased so much. This year, rates are still very high, but we're not seeing this giant surge in rates like we saw last year. Therefore, I wouldn't be surprised to see home prices start to soften very, very soon, probably in the next week or two. I would say probably within the next 1 month because prices tend to peak in the summer months, especially around June. So I would imagine if I had to put my real estate market fortune teller hat on, that prices are going to kind of go like this. Of course, it all depends on inventory levels and rates as well. But if rates stay around 7% and we continue to see this lack of new supply in the market, I would imagine we're not going to see a huge pullback in prices like we did last year. In fact, I wouldn't be surprised in about 1 to 2 months if home prices are actually higher than last year's levels. But I'd love to hear from you guys. What do you guys think about this theory regarding home prices in the second half this year? Please leave me a comment below. All right, that's that. There's, of course, a lot more I want to share in today's video, though. It says a lack of houses for sale, housing inventory, is keeping prices afloat. New listings fell 27% from a year ago during the 4 weeks ended June 25th, the biggest decrease since the start of this pandemic. Remember COVID lockdowns? As real estate agents like myself in Sacramento, where we weren't even allowed to meet with our clients face to face. And because of this, a lot of people decide to pull their house off the market. And of course, they opted not to list their houses for sale, of course, as well. So it's pretty eye-opening that we had the biggest drop since the start of this pandemic during the time when we tend to see an increase of new listings. Anyways, it says this has contributed to the total number of homes for sale, housing inventory, to decrease by 11%, the first double-digit decrease in over 1 year. Inventory is falling because of high rates, with many homeowners staying put because they do not want to give up their historically low rates. And again, rates are around 7% right now, more than double 2021's all-time record low of around 2.7%. So not only are high rates deterring homeowners from listing their homes for sale, but of course it's also deterring home buyers as well. But they still outnumber home sellers according to Redfin here. It says pending home sales were down 15%, much lower than the drop of new listings. So contracts being signed, pending home sales fell 15% during the 4 weeks ended June 25th, whereas new listings fell by 27%. Okay, having said that, here's their key housing market takeaways for 400 plus US metros that Redfin tracks on a weekly basis here. And this report covers the 4 weeks ended June 25th this year. I already talked about prices absolutely skyrocketing this year. It's going to be very interesting to see what happens in the second half this year. But let's talk about the biggest increases. So home prices increased the most in Providence, Rhode Island, a gain of 8.8% year over year. And that was followed by Milwaukee, Wisconsin, an increase of 8.1%. Then we had Miami, Florida, a gain of 7.3%, Fort Lauderdale, Florida, a gain of 6%, and Cincinnati, Ohio, a gain of 5%. No metro they track here had double-digit increases in prices, night and day difference compared to the spring months last year. In contrast, home sold prices decreased in 25 of the 50 biggest metros here. The biggest decreases in prices were Austin, Texas, down about 11%. Las Vegas fell by 8.7%, Detroit 8.4%, Oakland, California 7.5%, and Phoenix, Arizona fell by 6.9%. Meanwhile, the monthly mortgage payment on the median asking price home was $2,630 at the current 6.67% rate. That's the average rate according to Freddie Mac for the week ended June 22nd. But again, as of today, which is June 29th, average rates for people with great credit, according to the Mortgage News Daily, looking at daily rates, has increased to 1 month high at 7.04%. So in any case, at the weekly rate from the week ended June 22nd, the rate or the payment is about $2,600. That's down slightly from the all-time record high that was set from 1 month ago, but still up by about $206 more per month to buy an average price home today compared to 1 year ago. I would imagine that next week's report is probably going to record an all-time record high regarding average monthly housing payments again, which I would say is not sustainable, right? I just get sick and tired of talking about home prices increasing and average monthly housing payments reaching all-time record highs. I mean, I don't want the housing market to completely crash, but I know I hear a lot about you guys commenting saying that you do want to crash, you do want the opportunity to buy a house. I get it. I'm really sick and tired about talking about home prices increasing. It's absolutely crazy to think that, I know I'm going off on a tangent here, but I just think it's absolutely crazy that home sold prices are only down by $4,000 from the all-time record high last year, even though rates are around 7% right now. That is going to change though, believe me, because the second half each and every year, prices tend to decrease. Anyways, it's just frustrating. So if you guys are frustrated too, please leave a comment below. Anyways, all right. So pending home sales fell by 14.5% year over year, continuing a 13 consecutive monthly streak of double-digit decreases. Of course, we're seeing a lack of contracts being signed, but of course, a lack of new listings in the market as well. So pending home sales fell in each of the 50 most populous metros, except for one, as I mentioned in my previous video, which again, here's the biggest decreases. Cleveland, Ohio led the nation, down by nearly 25%, whereas Austin, Texas saw a gain of pending home sales, an increase of 0.5% from 12 months ago. Meanwhile, new listings decreased by 26.5% year over year, the biggest decline since May of 2020. New listings decreased in each of the 50 most populous metros as well. New listings fell by 45.3% in Las Vegas, Phoenix down by 43%, Oakland, California down by 38.8%, Seattle down by 38%, and Riverside, California down by 37.1%. So regarding pending home sales, let me share that with you right here. I went over this in my previous video, so I'll lightly touch on this. Again, down by 14.5% from a year ago, and also down compared to 2021 as well. Regarding new listings, this is absolutely crazy. Down 26.5%. So around 89,000 new listings for the 4 weeks ended June 25th. Compare this to the same time frame 1 year ago and also in 2021, there was around 121,000 new listings. This means we're missing approximately 32,000 new listings this year compared to years past. And this is actually keeping active listings at a very low level because we're not seeing enough new listings hit the market here. So according to Redfin here, new listings, or actually active listings, housing inventory, the number of homes for sale in the US, down about 10.98% year over year, also below 2021's levels as well. So according to them, there's approximately 750,000 active listings for the 4 weeks ended June 25th. Back in 2021 at this time, there was 816,000. 2022 at this time, there was around 843,000. This means there's approximately 93,000 fewer homes for sale today compared to the same time frame in 2022, and that's an 11% decrease year over year. Also, here's a look at the month supply according to Redfin here, because according to them, it's at 2.6 months, a fairly significant increase compared to last week, but at 2.6 months, this is well below the peak that was set in February at 4.5 months. And by the way, at 2.6 months, this basically means if we had no more new listings, then all the homes listed for sale right now would be sold out in 2.6 months. If we want to have a more balanced real estate market, we need this number to be around 4 to even like 6 months, for example. So this number here is suggesting we have a seller's market because we have more buyers than home sellers. And because overall nationwide we have more buyers than sellers, that's why days in the market has been decreasing ever since the winter months of this year. So days in the market right now is around 27 days. So right now it's taking about 27 days to sell your house. You get your house listed for sale. About 27 days later, you accept an offer from a home buyer nationwide. Every market's different, right? In Sacramento, where I live and work as a real estate agent, on average, houses are selling for well below 14 days. I would say on average about 7 days if the house is priced right. So it's a very competitive market in my area, but other markets, not so much, right? Anyways, days in the market around 27 days. That's about 7 days longer. I should say about 8 days longer compared to a year ago, because 1 year ago, days in the market was around 19 days. Now here's one metric that's still going up that is different compared to last year, because back in May last year, this metric right here was actually going down. This is the percent of houses that sold above the seller's final list price. So over the last 1 month, approximately 37% of the houses that sold above the seller's asking price. Of course, this means that approximately 63% sold at or below the seller's final list price. One thing you guys should be aware of though is that at 37%, even though this number is still going up, whereas last year it started going down in May, this number right here is still far below last year's levels because the percentage here was actually over 50% in 2021 and 2022, whereas this year it's around 37%. And lastly, let's have a look at the average sale price to list price ratio. This is based on the final asking price. Because for the 4 weeks ended June 25th, the ratio was 100%, meaning on average nationwide, home sellers sold their houses for their asking price. The last time we had a ratio this high was back in August last year. The 4 weeks ended August 14th of 2022. And also, just like the other metric regarding the percentage of houses selling over the asking price, this is still going up right here, whereas last year it started going down back in May. So right now, houses on average are selling for their asking price. At this time last year, the ratio was approximately 102%. So last year, selling for about 2% over asking. Now they're selling for the asking price on average. So I'd love to hear from you guys regarding today's housing market update. What's your biggest takeaway? My biggest takeaway, of course, is due to this giant increase in prices. It's deflating to say the least, in my opinion. Home prices very, very close to all-time record highs that was set back last year. Absolutely insane. And also much higher compared to 2021 as well. Let's look at 2020 just for fun here. Yeah, at 383,000 back in 2021, it was only 344,000. Back in 2020, it was only $278,000. And that's an increase of 38% over the past 3 years alone. Thank you so much for joining me in today's video. Hope you guys have an awesome day. I appreciate you, and we'll see you on the next video.